And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures family, and welcome to another week of fun and exciting futures trading. Happy Monday, May the 15th. My name is John Hoagland. Thanks for trusting me with your time. As always, we are seeking accurate context, good risk management, and patience this morning. Unfortunately, Jack is busy this morning. He will not be joining us, so I'm sure we'll all miss him dearly, and we'll get through this market prep here as we always do. I hope you had a nice weekend. If you're already in the markets, hopefully you've got things going your way. As usual, I'm a slow starter on Mondays. Markets aren't even really open, if you ask me, so I'm going to be patient and wait for the right opportunities as the day goes on. As far as economic numbers this morning, a little bit thin all week, really. We'll take a look at that here very shortly. But the 7:30 New York Fed manufacturing number was way lower than expected. We did see a little bit of reaction in some of these markets, but for the most part, the stock index futures are ready to open the week to the upside. We also have a lot of talking Feds today and all week. At 7:45, Bostic is due to speak. 8:15, Kashkari. 11:30. Barkin will be barking, and at 4 o'clock this afternoon, these are all, of course, Central Time. Cook is due to speak. So, what do we have for the rest of the week? Retail sales tomorrow. Bostic speaking again. Industrial production, business inventories, housing market index. Williams, Logan, and Bostic due to speak again later on in the session. Wednesday, housing starts and permits. Of course, excuse me, the EIA petroleum status report. Thursday, jobless claims, fully fed. Existing home sales, a lot of home information this week. More talking Feds. Logan speaking, Jefferson speaking on Thursday. Excuse me. Williams speaks again on Friday, and Chairman Powell speaks at 10 a.m. Central on Friday. So a lot of talking Feds. A lot of focus this week is, of course, going to be on the debt limits, debt ceiling talks. Markets seem to be just kind of hanging out and waiting for some sort of information on that. This morning, seeing things a little bit friendly for our equities. Apparently, there has been some progress as far as the staff talking back and forth. We have the president and McCarthy expected to speak and meet early this week, probably tomorrow. Apparently, the president is confident enough that they're going to come to some sort of agreement that he is still planning on his Asia trip that he, I guess, is supposed to leave for on Wednesday. We got Lacey here saying good morning. Yeah, Lacey. Hi, girl. Hey, girl. Stop moosing me. Unusual high number of talking Feds this week. This was a comment on a lot of people's minds that I was checking out over the weekend. And so, yeah, we've got a lot of possible unknown changes to the marketplace. Keep your ears and eyes peeled and always make sure you use stops. Crude prices were higher this morning, still in a kind of a medium time frame downtrend. We'll take a look at that in the charts very shortly. The VIX this morning is actually higher this morning. We've got the VIX at 1737, 1674, where it was on Friday at this time. Dollar index lower, still above 102, 102.5. It was 102.27 yesterday, or I should say Friday at this time. The yield on the 10-year slightly higher, 3.48. It was 3.4% on Friday. As always, make sure that you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel. You get notifications when we do go live. Today we have group coaching that is done on Zoom. I have just put in the link for you so you can register and join us. I know there were some good questions last week. Near the end of the week, I suggested making sure to email me those questions. And again, I ask you, if you have questions prior to getting into the group session, email me, jhoagland@topstep.com, JHOAGLAND@topstep.com. Remind me of those questions. Let me get set up for them, and we'll have a really good and useful group session today. After that, of course, we have Make Old Money, and then we'll try maybe and do a reflection at the end of the day. I kind of look at the end of Make Old Money as kind of that reflection. Maybe we'll just run it one to the other. Good morning, everyone. As always, I'm always checking. Will, good morning. Where do we email questions for the coaching meeting? jhoagland@topstep.com. Will, as far as I can see here, we got Dan Trader, top of the list here. Dan, you won the prize this morning. Shaw, good morning. Lacey's up here saying good morning to everyone. She's moosing me under the desk here. Yeah, same price, different week, right? Haggle Matters, good morning. Rooster, Will, morning. Steven, my brother Rick, good morning. Shane, Jay, Austin, Kevin, good morning. John, could we order some volatility, please, with a side of volume? I'm sure a lot of folks are feeling that way. Kevin, Brian, Jason, Nasdaq, Chad, Alejandro, Ashraf, Leslie. Come here, Lise. Come here, Lise. You may have you come up here and say good morning. You want to say good morning? Come on. Come on. There she is. There's Lacey. Lacey says good morning, everyone. She's my work buddy. Okay. Thank you. Thanks for the visit. Sarah Hall, Pershatam, Shy. Where's Winthorpe? Winthorpe, yeah, he's a little busy this morning, so we gotta charge on without him. We got Leslie, Bill Phillips, Brandon. I'm sure I forgot where I left off. Sarah Hall, prayers and love to you as always. Scott Sawney Conquer, Joe, feeling very grateful this morning, Joe. As am I. I think we have to remember how lucky we are to be in the place that we are, that we have the opportunities to get to where we are, and they have the opportunities that we have. It's a wonderful thing. Kevin, Open Mouth Committee, OMC, FOMC, yes, right. Don, Scott, Will, anyone else having audio issues? I don't know about that. It feeds a little wonky, but not causing too much of a problem. Thank you, Kevin. Thank you, Will. Rusty Golfer, Taurus Trader, George. Lacey was up to say good morning. Yes, the streaming is a bit delayed relative to John talking. Okay, Vince, thank you very much for that feedback. We're still working out a few issues as far as our production and all of that, as far as the Top Step TV thing going on here. Andy Bleed, Jason, Anissa, good morning, Kevin. Paul Tudor Jones is positioned for higher stocks, lower rates, as he is on CNBC saying the Fed is done raising. Expect stocks higher at year end. Well, that's good news for our 401ks and the investing that we have done there, right? JT, good morning. Vlad, stream is deteriorating. I wonder if that's on my end. I've been having some internet issues. Hopefully, I'm thinking that we've probably resolved some of them, but there she is. Yes. Yeah, she is a beauty, isn't she? She's a pretty dog. We just we really lucked out. She was a rescue, believe it or not. So, Grounds Hero, good morning. Kevin saying good morning to Lacey. Wiley Pro, Subham, Taurus Trader, a little cutting out. Sorry about that, folks. We're working on it. We'll just get into the charts here. Maybe that'll hopefully even things out a little bit. Let's see what we've got going on here. Just going to head to the charts. Hold on. Here we go. We usually start with the E-mini S&Ps. Let's start there. Here's the daily chart, so I can read my own writing. So we are in the 6th day of balance inside extended trading hour range. This market is seeking new information. There's no doubt about that. There's no direction. It's range bound. Volume has been low. Open interest changes have been descending. We're really just in an area where this market is seeking new information. And until it gets that information, we're going to be using range bound to break out rules. The upper and lower extremes should be obvious. As a matter of fact, it's going to be very obvious as we get into the 30-minute and the TPO chart. We haven't moved since, well, the beginning of April, the end of March. We're in the same place that we started April at. We haven't really moved that much. And a lot of that, of course, as we are all aware, is because of the looming debt issue. We got to raise that debt ceiling. Otherwise, they're telling us that all hell is going to break out. So we don't want that to happen. The market is patiently waiting for some information, good or bad. Here's the 30-minute chart. We added 1,700 in open interest. I'm kind of viewing that as somewhat inert. I don't see that it's all that. As far as open interest increasing or decreasing, we would say that there was probably to the downside. But looking at this 30-minute chart, we notice a couple of things. Yes, we are range bound. We have 1, 2, 3 very exact lows here. That's not necessarily good. And then there we have the gap that gaps us down to the island low that was pointed out last week by our good friend. So we are, what are we doing? We're in essence range bound. Our last week's low is here. Last week's high is here. Wednesday spanned the entire session. So my real focus is going to be on last week's high and last week's low. If we cannot accept and move away from this area of balance, the move would be to fade those extremes, and the eventual target for the trade would be on the other extreme of the area of balance. So, excuse me, I apologize. We did have and do have some overnight inventory to the long side, which is currently being reconciled. No gap. In range, in value, patience. Patience. I'm always patient on Mondays. I have to be. What about the TPO charts? Now we're going to get a real picture of where the area of balance is. Lows, even lows, even lows. Here's the gap. Here's our island low, which isn't really technically an island low because the market wasn't directional and then directional away from it. But still, it leaves that gap, leaves a prominent point of control down below. So if we can't hold these lows, this point of control down here, this point of control down here is this point of control right here, 40.80. Well, 40.78 really is our weekly kickoff low. So that would take us down to that level. Friday, normal variation day, calling it an extreme day because the center of the range is here, point of control here, volume point of control here, week low, week low, week low, week low. Finished upside auction, finished upside auction, finished upside auction, finished. If I had to, I would say a breakout to the downside is more likely. But this market is not going to do that until it gets some sort of impetus, some sort of new information scaring everybody. Well, we'll have to see how that plays out. So in the meantime, range bound to breakout rules apply. Fade the extremes, go with any breakouts accepted outside of the area of balance. What about the crude oil here? Crude oil is still in a downside structure. It is rollover week. By Friday, we'll be trading the July contract. So that's going to change things a little bit for us. It tends to make the market a little bit more range bound, and it makes it much more difficult to lean on open interest and volume information for trading decisions. However, 1, 2, 3 straight down days, and we had 3 straight drops in open interest. If this is a downside trend, it's not doing a very good job anymore. I would say, as a matter of fact, it's getting a D. It is a failing downside auction at some point. Now, what's it going to take to improve that grade? It's going to take new business to the downside if we're going to improve the grade of the downside auction here. But again, we have to remember we're coming to rollover, so that open interest may be a little bit blurry. If I'm going to count on that open interest volume, it's getting a D to the downside. Can't discount the fact that the structure is still to the downside. What does it look like on the 30-minute chart? Lower highs, lower lows. We're still holding downside structure. We had a little bit of a gap close here. Is it really closed? Oh, Friday, a double distribution trend day. The market opened in the area of potential balance, in the area of potential repair. Overnight inventory, maybe a little bit to the long side, not enough to scare anybody out. And we, again, we've opened between these high volume nodes, the point of control down here and an assumed point of control up here. Take a look at the 30-minute, or excuse me, the TPO chart. So it's kind of a double distribution trend day, right? There's a little bit of single prints that were left right here. We've opened between this high volume node and this high volume node. One of the things that we notice about this double distribution trend day is there's very low excess on the high, very low, as a matter of fact, a weak low on the low. The auction in both directions never finished yesterday, which I think leans us more towards the repair because we've opened between these two volume points of control. Remember, each distribution of time and volume, I address its own point of control. So that would take us down to this point of control and an assumed point of control up here. If we do that, then the market may be free to go somewhere else. Of course, any news, anything else happens, that can change things immensely. But right now, I'm looking at a potential repair from this point of control to this point of control. Again, with the unfinished auctions on both sides on Friday, kind of leads me to be a little bit freaky. We've got this little gap here that technically was not filled. What about the Nasdaq? Nasdaq is presenting as the strongest of the three amigos. I think it did actually have an up week last week with the Dow and the S&Ps had a down week. So you can see the market really trying to hold this line, and we're seeing kind of bull flags, bull flags, bull flags. What are we doing today? We added 200 in open interest on Friday. Whoopee. Not a very big change, right? That open interest, that inert open interest from Friday on a down day, we're putting in higher highs, we're putting in higher lows, down day, inert open interest. The auction to the upside is actually doing relatively well. I'm going to give it a C plus for the Nasdaq because it is in an upside auction in medium time frame. Take a look at the 30-minute chart here. Besweed, how do you know the upside auction is finished? Is auctions always die in excess, and I'll tell you a little bit more about that here coming up. All right. So here's the Nasdaq. Last week's high, last week's low. Again, kind of a narrow range for the week, right? But those are the areas that I'm going to be trying to focus on in the equities, are those last week's high and last week's lows. Overnight inventory a little bit long, bordering on value. The initial balance was the high of the session yesterday or Friday. That is excess. That is a finished upside auction, except for the fact that recent highs occurred in the overnight session. But I'll show you what excess in a finished upside auction looks like in the profiles on the Nasdaq here. So I'm really going to try and focus on the upper extreme and lower extreme for any longer term trades, longer time frame trades, I should say. Some of the all-day suckers we might find at those extremes. It's going to be, it's going to be a day where I'm really going to, and I always do say this, and I try to live to it, is to stay patient. The market's opening in range and in value. There's the perception of the change in value just isn't there. Be patient. Look for better trade locations. Let the market establish early ranges and and work the extremes of those ranges. Here's the TPO chart. So here, my good friend Biswede, is an auction that showed excess. Price got too expensive. Buyers wouldn't pay it anymore. And sellers took over and pushed price significantly lower. So auctions usually and almost always die in excess. Price got too expensive overnight. The market opened. Regular trading hour traders said, that's it. We're selling it, and they pushed price lower. So you can see here's an excess low. Market was too cheap when it opened in the regular trading hour session. Buyers took over and pushed price higher through the entire session. Excess low, lower excess than here, but this kind of put in our high for the week. Always be thinking, as always, about what the market is attempting to do, if it's attempting to do anything. The S&Ps have attempted to do nothing for the last 6 sessions. But the Nasdaq has been attempting to move higher. How good of a job is it doing getting there? C plus, average, not impressive, still doing well though. All right. Here's the gold. I guess there were a couple of gold companies that are merging, make it twice the size of the next gold mining company. I'm sure my brother Rick Randolph is on that. Maybe we'll get the chance to talk to him during Make Hog Money, which is 2:00 this afternoon. So he'll probably be off doing something else by that time. All right, here's gold. Balance remains. We failed week before last. We stayed range bound. We're still range bound. Short time frame control. Volume has been okay, waffling. We lost 2,300 in open interest on Friday. No major changes, nothing really to speak of as far as bigger opportunities. So we go to shorter time frame, 30-minute chart. No overnight inventory. We opened in range and in value. My suggestion, as always, is be patient. Better trade locations will come as the day goes on when we open in range and value. We'll see how that plays out at the end of the day. Not in any big hurry to get into anything here in gold here this morning. What about the TPO chart? Does that help us? Excess, IB extreme low, excess off the highs, balance, normal variation, extreme, more to the downside. It makes sense that we lost 2,300 in open interest. It's a bit of a B-shape, long liquidation profile, kind of following suit with the previous day. Here we are in range, in value. Patience, Iago. Euro. So we had a breakout. We had an upside move. We had upside digestion. We broke the upside digestion on Thursday. We had a pretty decent move to the downside and a pretty decent move to the downside on Friday. But I'm not impressed by the amount of open interest that was brought in. 1,400 on Thursday, 1,200 on Friday, 2,600 open interest from here to here. That's not big. That's not very indicative of an extremely healthy downside market. I'm giving it basically another C. I'm not that impressed by the amount of open interest. Doesn't mean that the market can't bring in new sellers and start to really auction more healthily to the downside. Just at this point, I don't see that this downside auction is bringing in what it's going to take at this point to continue this downside move. So volume, well, it was okay. Open interest, it did increase, but again, kind of meagerly. Here's the 30-minute chart. We did not close this gap. Well, what doesn't happen is as equal and important as what does. We've got another gap down here that looks like it's remaining unclosed. We took out the last week's low in the overnight at the 5 o'clock bar here, did not accept. We're holding overnight longs, and we're in range and in value. So, if we can put some sort of upside structure in place here to limit risk, then I could see we could have an overnight inventory adjustment back towards settlement at some point. Looks like the market is already kind of struggling this move to the upside. Again, if we take out and close this gap, get into for Thursday's range, there's plenty of things to look at, plenty of opportunities for us to move this market higher too. We've got a gap, we've got another gap. Naked point of control, naked point of control. I mean, there's all kinds of visuals on both sides of this market. These naked points of control go from the way back, and you remember the station wagon that had the seats that you could pop up in the back. We call that the way back. Well, that's where these naked points of control are coming from. Don't make me come back there. And know where I'd like to get an opportunity, and that would be right down here. This is a very target-rich environment. We've got last week's low, Friday's value low. We've got point control. We've got the settlement price, and we've got the top end of this gap. All very tightly packed here. I'd really look for a nice opportunity. Well, maybe a little bit of a bigger opportunity if we get the chance to look in there. To look down there, throw a lure with a nice night crawler under that pier that we've got right here. See if there isn't a nice northern hiding under the shadows under there. Here's the 10-year. 10 years gone. Hey, that's a Led Zeppelin song, right? So medium time frame balance remains. Open interest continues to build over the last 3 days, although a little bit weaker on Friday, only adding approximately 27,000 in open interest. On the opposite direction, where it added a whole bunch of open interest on the upside, it seems that this market is starting to build energy, but still has no direction. Debt ceiling, rates, what's going to change? What's going to change, and when is it going to change is really the question I have for anybody that's trading the 10-year. So we're in short time frame control, and we should be able to locate short time frame levels that might be respected. The problem is there are so many of them. You don't know which is the right one. And look at where the price is. Central between weekly kickoff high and weekly kickoff low. We got a chance down here against last week's low to limit risk. Here, what's it look like on the 30-minute chart? Gap closed, rejected. I would say we may have a decent opportunity to look down to last week's low here. We're getting a little bit short in short time frame. So what do we have as far as short time frame? Well, we've got Wednesday's low is a potential execution area. We've got the last week's low as potential execution. We've got a little space down here below, another gap down here that takes us to weekly kickoff low. We've got naked point of control, naked point of control, naked point of control, last week's high. There's all kinds of different levels for short time frame traders to lean on. How about value low from Friday, value high from Friday? We did open outside of the range and value from Friday. So if we do actually bring price higher and accept inside of value from Friday, the value area special situation play comes in and price could possibly bring us back up to the value high from Friday. So far, though, we've seen nothing but rejection in that area. I think the fish are a little bit deep for us to fish this, or at least for me to fish this market today. What about the natural gas? So it's also going to be beginning rollover very soon. Very narrow range last week. Last week's high and lower, somewhat pivotal to any decision making I would be making today. So we're looking above last week's high as we speak. A lot of open interest has been increasing in this market over the last week. The 3,600 on Thursday. We had 11,000 on Friday. Open interest coming in. And again, that could be a beginning function of rollover as our longer time frame traders work on getting a cheap rollover. A cheap rollover means if I'm moving product between the June contract and the July contract, I can do it three different ways. I can do it on the spread. And if I buy the spread, if I need to buy the spread, I can save myself a tick per contract, or I can sell the spread if I need to sell the spread. And if I sell the offer, I can save myself a tick per contract, or I can leg it. I can get into one product into 1 month before I get out of the other month, or get out of 1 month before I get into the other month. That's the riskiest way. But our longer time frame traders are focusing on at least not messing up their rollover. They don't want to lose money rolling over, and it's difficult and it takes concentration, and it's one of the things that I think keeps markets more range bound when we come into rollover. So just keep that in mind, especially in crude oil this week, natural gas next week. So here we are, balance breakout rules apply using last week's high and low. Here's last week's low, last week's high. We've opened above range, above value, rejecting value. Now, if we start to see legs up here, we go with breakouts. You can use last week's high sometimes as a breakout level, especially when the market is as sort of range bound as it's been. Take a look at the TPO chart now. So we're looking for excess finished downside auction. Here's a finished downside auction. Too cheap, buyers took it up. Week high, finished upside auction, finished downside auction, finished downside auction. Although this is somewhat weak because of the exactness of these two lows, but we already see that the market is rejecting price from yesterday, or value, or even range from yesterday so far. So a test of weekly kickoff high is looking rather likely, and that is should be up here. That's a naked point of control. 250 is weekly kickoff high. I don't think I put it on here yet, but that's all right. So, we're looking forward to, an interesting, challenging trading week. Back off the charts here. And we are, each day it seems to be kind of a page in the chapter of the trading week in the book that is the trading year. Make it a good page today. Looking forward to seeing everybody for group coaching, and looking forward to seeing you for Make Hogue Money. And let's take our deep breath. So stay humble, grateful, creative today. Stay centered in your mind and in your emotions. If you find yourself off center, get yourself back centered before getting back into the market. And it's always an opportunity, good or bad. We can make it. We all can do this. I know we can. So I'm looking forward to your success. Stay kind to yourself. Stay kind to others. Say a prayer for peace. And I will see you at 12:30 for group coaching. And we'll catch up then. Have a great morning and a great session today. We'll see you later. Have a good one.